Hi, now we are at investment in real properties. So, what is investment in properties? An investment of real estate property purchased with the intention of earning a return on the investment. People are willing to give up or forgo a capital sum or big sum of money in exchange for benefits in future. Next, issues that need to be considered before investing in property. Firstly, to decide how much to spend and the percent to be invested in property. Secondly, where is the best place to invest? Should it be an established location or new township? The key is go to capital appreciation such as landed residential properties by opting landed in good locations. Third, who is the developer? What is track record? Fourth, to evaluate the sources of financing. Fifth, to evaluate the real estate cycle or the timing of entry and also exit. Last but not least, to look for the infrastructure because a property which is surrounded with good infrastructure will have a better value than one which is remote.
Hi, what is unit trust? Unit trust is a collective investment instrument where funds are pooled together and used to invest in a portfolio of securities or other assets. The fund will be managed by a professional fund manager where she or he is responsible to invest the fund into a portfolio asset like cash, bond, and even real estates. The fund will divide into a small piece called unit. Investor will invest into funds by buying these units. Okay, next is factor to be considered when deciding to invest in a unit trust. Number 1 is understand your risk profile and decide whether it is suitable for you or not. Number 2 is evaluate the track record of a fund manager. Number 3 is look at the cost of operating a unit trust fund or check the expenses ratio. Last but not least, continue to review the fund manager performance by reading the reports.
Types of unit trust. The first is conventional unit trust. There are 6 elements: equity funds, fixed income funds, money market funds, real estate investment trust, exchange traded funds, and balanced funds. Equity funds. Equity unit trust funds are popular in Malaysia as they provide investors with exposure to the companies listed on Bursa Malaysia. Fixed income funds. The objective is usually to provide a regular income with less emphasis on producing capital growth for investors. Money market funds operate in a similar way to a bank account. The unit price is normally set a fixed amount. Real estate investment trust invest in real properties, usually prominent commercial properties. Exchange traded funds. Objective is to achieve the same return as a particular market index. Balanced funds generally has a portfolio comprising equities, fixed income securities, and cash. Second type of unit trust is Shariah funds. The main objective is to provide an alternative avenue for investors sensitive to Sharia requirements.
Assalamualaikum and hello guys. Now I want to tell you about advantage of unit trust. And here are some of the advantages that can be listed if you invest in the unit trust. The first is diversify the risk. The investments are spread over a large number of financial assets, and the fund also be invested in overseas markets, not only in Malaysia. Second is safety and less monitoring. It is because the unit trust is managed by full-time professional fund manager. The third advantage of unit trust is minimize risk. The investors can choose based on their preference, and the recommendation from the expertise will make the investment less risky. Next is liquidity. An investor can sell his units wholly or partially at the following trading day's unit buying price, and the units that have a high liquidity rate can be readily converted into cash. Fifth is advantage of compounding. It provides facilities for investors to reinvest their distribution. Those who opted for distribution reinvestment, the fund will be automatically credited into the investor's account. Last but not least is low capital requirement. The capital of unit trust is relatively low and affordable to small investors.
So, what are the disadvantages of unit trust? Firstly, lack of publicity. It is hard to catch customer attention to make investment in unit trust. Secondly, lack of experience. Fund manager with lack of experience and expertise will affect the trust of their customer. Thirdly, lower return. This is because when investing in unit trust, investor may pay a lot of expenses in order to buy and sell the unit trust. This may reduce the return.